Hi, good morning, everybody. I want to address today one of the questions that I hear a lot, quite a bit discussed in the retail or professional options trading community. And it's this question: why? Well, this is what the question should be. A lot of people look at the VIX over the weekend, or they'll look at options and they say we're going to sell to get that weekend decay. And I want to make a statement here. Most Monday mornings, I would say over 70% in my experience, VIX is going to open up Monday morning. Why? So here's the question we're going to address today and talk about it. Why is VIX up 75% of Monday mornings? Why? And relate that to this decay over the weekend. And I'm going to get the decay over the weekend. So that's the question we're going to address today. Why Monday mornings? Why VIX probably 75% of the time, in my estimation, will open up Monday morning? And let's start with, I was in the trading pits for over 20 years. And let's address that, since I was the person on the other side of your trades. So let me just show you exactly how this happens, right? So here we are. I'm just going to put up here a couple options in SPX. Here's June 26, 10 days out. And here's July 3rd. $17 days out. I'm going to add a few other things here. Implied volatility, 9.42. Just give you just a little idea what happens on Fridays in the trading pits, 9.9. And then here's something called Vega, get to that, 3.6 and 4.7. And then here's the bid ask for this example, 38.39. And again, this is an SPX. This is a $5,431 vehicle. And then the 53, 54 and a half. So a lot of times what happens is I'm in the pit and retail, brokerage firm comes in and, hey, what are the June 26th options trading at? I'll say, hey, you have to give a two-sided market when you're in the pit. I was a market maker, but I was a specialist for many years. It's just a market maker with a bit more responsibility. And so I'd say I'm 38 bid. My ask is 39. I don't know whether they want to buy or sell. So on Friday, you get more sellers generally. So let's just take this option, right? So if I'm getting more sellers on the 38 bid, I have a requirement. Let's say I've got to honor, that bid is good for 20 contracts. So 50 people come in and they want to sell it at 38. I'll give the first 20, I'll buy it at 38, and then I lower it. So SPX is the same price, and I'll lower it from 38.39 to maybe 37, 38, right? I mean, part of how wide I can make the markets is based on the cost, right? If it's a $2 option, the requirements, what I can make the width is different than if it's a $38 option. But you can see I lowered the price based on more sellers. SPX is still here. Now, how does that take place in the pit? What I would do is just take my finger. We're the specialists, so we kind of control the volatility levels in terms of I could adjust them, but I didn't do it I only did it based on supply and demand. So I would tick down this volatility. Another way I would do this is I would lower the volatility, maybe from 9.42 by making the bid ask this. It might be now 9 is the implied volatility, or 8.5, whatever. So I have these sellers. And then what happens is Monday morning, okay, the sellers aren't there anymore, right? And maybe more buyers, which there usually is, maybe Monday morning. And so I had lowered these here. So with there not being much sellers, let's say Monday morning, I just raised the volatility back up, right? From 9 to 8.5 to 9.42. See that? So what implications would that be for you as a retail trader? I don't make my decisions on, you hear a lot about, I'm not going to do a trade on Friday, blah, blah, blah. I mean, the main reason I wouldn't do a range bound trade on Friday, if there was a reason, is get 2 days of weekend risk, right? Now, people do trades. They'll think, well, I'm getting weekend decay in your favor. Well, you're really not, because when I was in the pit, I would lower the volatility that there's sellers. You can still have decay over the weekend, but you also have the weekend risk. So what's the principle? I trade on Friday if I want to trade on Friday. If it's a trade that I put on Thursday, I could put it on Friday. Now, for practical advice, if I was going to put a range bound trade on Friday, I might put it in, sometime maybe after the first hour, no later than that or so, just because I think it'd be better pricing in terms towards the end of the day. They're already put a lot of pressure on some of these options, selling them. So some of the principles are trade on Friday if you'd like. Again, watch this yourself. Now, today is June 16th. Yesterday was June 15th. Friday, VIX was actually up 12.66. Thursday, it closed at 11.94. So it was up 70 cents. So tomorrow might be one of the few days that might actually be down a little bit at the opening. But if you watch it on a regular basis on Monday, I would say at least 75% of the time it's up Friday morning. Another practical thing that you can think of, and I'm going to give you a trade here in a second, a good application, but duration. Is this going to affect your short-term options? Yes. So if you're doing more short-term options, but it won't be as big effect if you're doing something, 2 weeks, 3 weeks out at all. But know that you're not getting a free lunch over the weekend. You're getting maybe less decay than you thought. You can still get some over the weekend, but you are taking the weekend risk. Now, one last thing I want to show you is, because of this, do I think there's some practical applications? I do. I've been doing this for years, this 15-day calendar. And here's an example of what I did on Thursday. And this will be the last thing I'll go over. So if you look at this calendar put on Thursday of last week, and I put it on at the 54.20 strike. And what is a calendar? A calendar is a mixed month spread where you're buying the further out option, selling the closer in option. And if I'm non-directional, I'll do it somewhere at the money. So I think SPX was near 54.20 at the time. Right now it's 54.30, but 10 points on a $5,400 vehicle isn't a big deal. So I would put this on Thursday, generally 4 to 5 days between the long and the short. There's 4 days. But because you have Thursday, I put it on maybe midday. A lot of times Friday afternoon, I would get 6 to 7%, maybe a little bit more. But most of the time I'd get out by Monday. And part of it is I do get some decay over the weekend, but I'm doing the trade because I want to do it. You don't get as, again, I don't think I don't put it on because of that, but it has worked out well over the years. That if I put it on Thursday, I am getting some help decay over the weekend, but a lot of times it comes Friday because as they're lowering stuff. Just to give you an example, I put this on Thursday for $5.35, so it's $535. for the trade, and it closed Friday at 585. Well, that's $50 divided by 535, over almost 10%. Now, does it happen all the time like that? No, but I think that's a practical example of how I use the sum of the weekend to my advantage. But again, I'm coming before the Friday nonsense takes place and more sellers come in. I'm putting this on maybe Thursday midday. So that's just a little bit of discussion. I'll do some more. If you have questions on that, maybe I'll do a follow-up on this based on if you have some questions or whatever. Since I was on the opposite side of those trades for many years, as far as your questions, I can include that in part 2. So one last thing, check us out, Dan at Sheridan Risk Management. You could click subscribe, and for, I think it's $194 for a month, you get everything, all our on-demand classes, 2 hours of teaching daily with live trades, teaching you the craft of option trading, kind of holding your hand as you go through it. Extremely practical. If you'd want to come in a month and try it and see if it's for you, this is mostly range-bound trading that we do based on probabilities and decay. If you email me, Dan at SheridanRiskManagement.com, I'd get you a coupon for $99 for a month to get everything. And you could check it out. So folks, have a wonderful day, and I will see you next time. Thanks.